Ravi Jhunjhunwala, CMD and CEO at HEG, joins us on the show right now. Ravi, walk us through the highlights of the quarter gone by.
You see, the dynamics of this industry changed about a year and a half ago because China decided to close down about 150 to 180 million tons of their steel capacities, which were producing steel through the blast furnace route, which is extremely polluting in terms of nature. So with that happening, their export of steel, which was in the region of 120 million tons in the last couple of years, suddenly went down to about 65-70 million tons. So which obviously meant that the other part of the world, which produces at least 50% of the world's steel, suddenly had to produce 55 million tons of additional steel. And that's where the whole dynamics of the industry changed, because to produce that steel in the western part of the world, you needed more electrodes. And so that suddenly created an imbalance between the supply and demand. And there was a shortage, and which led to unprecedented price increase. And the nature of the industry is such that there are very strong barriers to entry. And in fact, we in HEG have been the last new entrant in this industry in 1977, which means that in the last 41 years, there has been no new company which has entered this business. So this is the dynamic, and this is the reason why the whole thing has changed in the last about 18 months or so.
Okay. India GE prices, do you think they're going to ease post the development? And what is the kind of movement that you're witnessing in graphite electrode prices of late? Because we understand it has tempered a tad bit.
We haven't seen much of a tampering. I mean, we believe that the demand is still very strong. There is still a shortage. We produce about 80% of our production, which is called ultra high power, where China is not a player. China is not competing with us. In the balance 20%, the Chinese prices keep going up and down on a daily basis, so which more or less doesn't impact us a lot on a daily basis. I mean, we are a long-term player, and we have contracts which are valid for about 3 months to 6 months. So that has not impacted us.
Right, we understand domestic steel companies are putting pressure to reduce prices for domestic consumption. Will you be relooking your pricing trends rather?
No, it is obvious this tussle between a buyer and a seller will always continue, but so long as the demand is outstripping supplies, the situation is not going to change much. Of course, we also believe that going forward in the next 12 months or so, because of the consolidation which we have seen with so many NCLT large steel companies changing hands, and obviously they've changed hands to go to a stronger hand. So our estimate is that the Indian demand itself is going to increase by about 15 to 20% in the next 12 months or so. Not because of any capacity addition, but because these companies have changed hands, and and the new buyer is going to produce much more steel out of the same capacity.
Right, you have a significant portion of cash in hand. How will you be utilizing the excess cash?
So we have been on record saying that we are planning to expand our plant from 80,000 tons to about 100,000 tons. And we have been working with one of the prominent consultancy company in this company over the last 6 months or so. It's a matter of another 4 to 5 weeks before we are able to put a final number on this expansion and the final date that we expect this expansion will take. So just wait for another 4 or 5 weeks, and we will make a formal announcement on that.
Right. So what are the contracts that are currently up for renegotiation, and are contracts being renegotiated at healthy rates?
So there's no renegotiation. I mean, we generally get into a contractual deal for either 1 quarter or in some cases 2 quarters. So this continues the way it has been continuing for the last 5-6 quarters.
Okay. Chinese limits on steel production and efforts to cut pollution, Mr. Jhunjhunwala, are lifting steel output by electric arc furnaces as well. Do you expect supply trends and capacity to remain tight?
China closing down environmentally unfriendly kind of steel production through blast furnaces. That is the main reason for the change in the industry dynamics. But as far as China itself is concerned, we neither export to China nor we compete with China in the ultra high power grade. So whatever happens within China, we are more or less insulated by that. So if that is your question, then no, whatever happens in China doesn't really impact us.
Okay, is needle coke secured as raw material for running at full capacity?
Needle coke is purchased on a 6-monthly basis, so we are of course committed up till December at a particular price and at a particular for a particular quantity. And for the next 6 months, from January to June, in the next 30-35 days, we'll be doing it.
Okay, Mr. Jhunjhunwala, we'll leave it at that. Thanks so much for taking out the time and speaking with us and highlighting what the quarter is like and more importantly what the visibility hereafter is like.